I focus on these three things when I'm trading, and if you focus on these, it is going to make you a better trader. Number one, volume. Guys, I've said this a million times, and I'm going to say it a million more. Volume is gasoline that goes in your car. It is the same thing in the market. Shares being bought or sold is going to drive the direction of your price. So if we just look over here at NVIDIA, this is a company that has phenomenal volume the majority of the time, but there's been a lot of times over the past several months where you can actually see, so this yellow line that I'm tracing in blue right here, this is the average volume line, and you can actually see that the average volume is coming down. So if we draw this line right here and draw it down here, you can see that there's actually a difference in volume. What is that? That means that there's less people participating in the market. Now, how does that affect you? Well, when you're trading, you need to make sure that you are getting good, consistent volume, preferably average volume. Why? Let's put it this way. If you have a stock, and I'm going to use extremes here. If you have a stock that has 100 shares outstanding, okay, and somebody goes in there, and let's say that this stock is, and I'm actually going to say this stock is $1 per share. And this is a great example to give because there's a lot of people that can go out there and buy, for example, $100 worth of shares, $100,000 worth of shares, $1 million worth of shares. There's a lot more people than you think out there. But if somebody goes out there, it's a market, buyer and a seller. Somebody goes out there and buys 10 shares of whatever stock this is. What's going to happen to the stock price? Well, the stock price is going to go up. Why would it go up? Because there's no push and pull happening. There's no sellers. Now, if you still have 100 shares and somebody comes in and they sell 10 shares and you have a buyer of 10 shares, what happens? Well, the price is probably going to stay pretty neutral. It's not really going to go anywhere. Now, if you have somebody that comes out and buys, let's say, 30 shares in one morning, what happens? The stock price booms up. Everybody gets very excited. Everybody starts to go and buy, but you can't buy as many shares as this person that bought 30 shares. And as soon as they sell their shares, what's going to happen? The stock price is going to plummet because those other people that maybe bought 1, 2, 3 shares, they are going to be caught basically with their pants down. Stock price is going to drop. Why am I showing you this example? This is how volatility happens. Volatility happens when there's not a lot of people out there filling out the totality of the 100 shares, if that is average volume for the day. That's why when I'm looking at a swing trading chart, I have volume up here on the bottom. Volume is so important to pay attention to. If you are not getting good volume, and here with NVIDIA, you can see we're getting good, consistent volume pretty much every day. Yes, you have some days where it's not happening, but if you're getting good volume every day, that is going to give you the indication that, yes, that is a good stock that you can trade on a repeated basis. Number 2, let's go to the trend. You've heard me say this a million times. The trend is your friend. If you follow the trend, you are going to do very well in trading. If you do not follow the trend and you deviate from the trend, you're not going to do well in trading. I'm going to show you an example of a stock that I am in right now, and this is Micron. Micron, I'm going to look at it from a long-term perspective. Why long-term? Because I want it to just be clean. I want you to see the trade that I've executed. We're going to assume that we've had good volume and there's good selling volume, but I want to show you the trend and how I'm trusting this thing. So if we look at Micron, we kind of had a head and shoulders pattern up here. Don't worry about that right now. I'm just showing you where this crash came from. Head and shoulders pattern right here indicates that it's going to be a downward movement. And actually, we did get a very downward movement. I sold short somewhere right in here. From here to here was about a 30% gain. Everything was going great. I was very happy. I'm up 30% as Micron is falling. Now, what do you notice? You notice here that this actually gave back about half of my gain. Now, I took profits down here, but why did I not exit right here? Why did I only take profits down here? Because the trend was still with me. If we look at the stochastic or the trend down here, where in this little area right here does it tell me to exit the position? Nowhere. The overall trend is still down. And actually, this thing is getting so far on the bottom now that it's going to probably go sideways down here and the price is going to continue to fall. So when I say you need to trust your trend, you need to trust that even when a snapback like this happens, it is very temporary. Now I'm going to pull something up over here. I'm just going to pull in a supplement so you can see what happened on a daily chart. When this started to rebound back up, this started to carry. It was running into the 225-day moving average. And I was saying to myself, okay, it's probably not going to get through that. Why is it not going to get through that? We weren't getting average volume. And what was more so than that? Look at my volume here. It was starting to decline after it reached that 25-day moving average. So coupling volume with this part of watching it run into these resistance points, coupled with me overall just trusting my trend, not really worried about this, I said this thing is going to fall back down. And that's exactly what's happening right now. This is an ugly face pattern here. Everything was tuning up to say this is going to fall back down, and that's what's happening. But the moral of the story with this piece of trading is trust the trend. Do not deviate because you see price moving against you. Just because price moves against you doesn't mean that the trade is over, and that is why the majority of traders don't make money. The majority of traders will sell somewhere in here, and then they'll miss the big move back down, which is going to happen with Micron at some point here in the near future. Now, this is a perfect segue to number 3, and that is price action or engulfing candlesticks. When we are looking at something, we need to know, when do we buy something? We need to understand what price action is. And this almost goes back to volume. So if somebody comes in and there's 100 shares outstanding of something and somebody buys 10 of them, the price is going to move up. That doesn't mean go and buy it. You need to have the trend and the volume with you before you go and do it. If somebody tells you, and there's probably so many YouTube channels out there that say, you need to load up on this stock because the price is going up. Well, just because the price goes up on something doesn't mean that it's going to continue to go up. That's just not how the stock market works. You need to have a trend behind you that's going to push you. Now, it could be a 15-minute trend and you can be day trading and that's perfectly fine. But if you think that something is just going to go up for the sake of going up, that's like a monkey taking a bunch of poop and throwing it at the wall and hoping that something sticks. It's not going to end well. Your trading career is not going to go well for you. So when you're looking at price action, you need to make sure that you are coupling it with trend and volume. So let's look at some candles here. Going back to when I got into Micron, for example, I was looking for engulfing candlesticks, and this is really price action. Price action is an engulfing candlestick. If you get price that moves up like this and you have a thick candle, meaning that it started at the bottom, now we're here, that is going to be your big price action buy signal. Now, if you have something that starts at the bottom, runs up to the top and pulls back down, your candle is going to kind of look like this, and it's going to look kind of weird. This is called a wick. That is not the type of price action that you want to see. You want to see big, thick green candlesticks when going up, big, thick red candlesticks when coming down. And that is exactly what you had here with Micron. You see that you had it several times throughout this entire trade of Micron. I could have added to this position many, many times over again if I really wanted to. But for me, I'm more of the person that kind of sprinkles in a few shares, then I go all out at the beginning of the trade. Why? Because I'm trusting the trend. That's really what it's all about. When it comes down to trading, trusting the trend is the majority of what you are looking at. Then you look and say, okay, are people going with me? Do I have buyers or sellers on my side, depending on the direction I'm going? Then you look at the price action. And if the price action dictates that you should buy or sell, and those other two things are checked off, you have the perfect execution for a trade. Now, I want to say this. If you are trading every single day using the method that I'm showing you, you are trading too much. It is absolutely impossible to find that many good trades unless you're day trading. But if you're on a swing trading chart or a long-term chart and you're finding trades every single day, there's something wrong and you're trading too much. It is not possible to find that many great setups that combine volume, trend, and an engulfing candlestick or a price action candlestick. Now, with that being said, this is a very, very profitable business. Here's the idea behind what I just said. If you're trading every day, there's something wrong. But what do I look for? I wait for these really great setups where I can make 30% on a trade. Guys, I made 30. I was up. I should say this. I started here. I made 30% to here. I took profits. So I took my profits off the table. I went back to my original cost basis. And now I'm back to making money again. So I'm still profitable on the position. But the point of this is saying I'm up over 30% right now. That is not an outrageous number to expect. You can absolutely expect those. I'm in Moderna right now. I'm up significantly. I've traded AMD this year. I'm up significantly. There's a lot of places that you can go and make a lot of percentage points, and you don't have to do it every day. That is the main point behind what I'm doing. I am looking for the quote-unquote perfect setup where I know that I'm going to have the highest probability to make money. All right, so I made a video called The Complete Guide for Traders, and it really is the complete guide. It's everything that you need to know about my method of trading. It's bookmarked, so you can go in there and figure out what you need to watch and where you need to sharpen your tool. Click this video right here, and also, I go live on YouTube on Thursdays. Come check it out, and I will see you guys there.